please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Straight away then to a CNBC TV18 exclusive, we learned that the Law Ministry has submitted its view on sugar cess to the GST government of ministers headed by Assam Finance Minister. Timsi Jaipuria joins in with more details. Timsi, what are the recommendations and what are the implications if indeed a cess is imposed on commodities?
Well, as you rightly said, the Law Ministry has submitted its view on sugar cess to GST GoM, which is headed by Assam Finance Minister Himanta Biswa Sarma. Law Ministry is of a view that Council under Article 279A of Constitution has powers to recommend cess for any commodity under GST. Government officials do indicate right now that GoM, which is likely to meet now on June 3rd, will deliberate on the view submitted by the Law Ministry, also talk about the quantum of cess, because that is also one of the part of the TOR of the GoM as to how much cess should be levied. Remember, the proposal was to levy a 3 rupee cess on sugar per kg. But yes, when you talk of implications, yes, it will have a straight ripple effect on a lot of commodities, a lot of related commodities where sugar is an input. So those commodities are likely to get impacted when it comes to pricing, because sugar is an input. Not just this, a lot of states in the May 4 meeting had concerns that if you are levying a sugar cess, then we would also want farmers of various other commodities who are in distress, be it rubber, be it bamboo, etc., that there should be a cess on these items as well. But yes, that would mean a whole host of items and a big Pandora's box being opened. So let's see what GoM decides. But yes, as of now, Law Ministry has submitted its view and said that yes, Council has the powers to recommend an additional cess when it comes to sugar cess.
So, Timsi, this sugar cess will be imposed so that the government can compensate states for the losses that they incur on account of GST in the early years?
No. Okay. This cess would be used directly to go to the farmers and the sugar mills. Okay. Now, that is also one of the TOR as to what should be the mechanism to ensure that if such a cess is levied, then it goes to the farmers who are in distress and the sugar mills who have huge loans on their books. So this is a cess to try and help these farmers. But yes, how will it go directly is something that the GoM has to deliberate upon. What should be the mechanism to distribute once the cess is collected?
Okay, so this should be a positive for sugar mills, right? Once the farmer dues come down, that will alleviate and give some kind of a relief to the sugar mills.
Yes.
Okay. Thank you, Timsi, for that. I think we should take a check on the sugar stocks, right? Like Balrampur, Renuka, etc. and see if there is any kind of a stock reaction.
Yeah, there is some kind of reaction, but then I don't know whether or not they're holding on to those gains. It'll be a positive. We'll have to see the quantum. We'll see how they're going to levy this as well. So we'll wait by some of those stocks moved up. Remember, some of them have been badly beaten down out of shape. But yeah, some kind of a reaction is what we're seeing. June 3rd is the date we're looking forward to. But let's move on then. We have Sandeep Wagle and Rajat Bose who join in. Sandeep, coming across to you first. The trade on the Nifty.
Afternoon, Nigel. I think Nifty is still a sell on every rise. Maybe 10,480, 10,500. Stop loss of 10,550. And I still expect lower levels of 10,350 or so. Stock specific, I would go with a buy in a SBI, stop loss 263, target 278, and a sell in a Dalmia Bharat, stop loss of 2625, target 2500.
Okay, thank you, Sandeep, for that. Rajat, what have you made of the seesaw that we've seen in today's trade and your trading ideas?
See, I tend to think, although initially I was also quite negative on the Nifty and I was expecting 10,330, but if you observe, yesterday's low was 10,417, today's low is 10,419. So this could actually, this is in candlestick parlance would be called a tweezer bottom. Of course, the bottom needs to hold for the day. That in the latest for the day, that in the latest session, it should not go below 10,417. So if that were to happen, then expect some kind of a pullback rally, and that pullback rally can take the Nifty to 10,580 to about 10,585. As of now, if you were to take a trade, then you have to put a stop loss willy-nilly below 10,417. So it is a contrary view, but looking at TCS, looking at other counters, I tend to think that there is a possibility of a minor pullback. After that, this downtrend might well resume. As for the stocks, I find that pharma stocks are doing pretty well today. I've chosen two Indian pharma stocks. That is Sun Pharma. I would put a stop loss below 463, and 480 and 485 are the two targets for the day. And Dr. Reddy's, I would put a stop loss below 1959, 2009 and 2037 are the two targets. Dr. Reddy is actually very close to its major support area between 1950 and 1900. Even here, people who are actually thinking of buying for medium term, they can also resort to buying it. And disclosure has it that I have Sun Pharma in my investment portfolio and planning to buy Dr. Reddy. That's not a disclosure, but just an intention that I'm expressing.
Okay, all right. Thanks so much, Sandeep, as well as Rajat, for joining in and giving us those trading strategies. Well, let's get a quick view then in terms of those flashes that we just had for you on the screen. Remember, Timsy just joined us and she told us that the Law Ministry's view under a particular article, that's 279A, that the Constitution has the power to recommend cess for any commodity under GST. The meeting is scheduled on June 3rd. We'll have to understand the mechanism as well as what will be the total quantum. But to get a view on that, we have Uday Primpikar of EY who joins us. Hi, sir. Thanks so much for joining in, sir. Your view on this? We just have the Law Ministry's view as of now. We understand that on June 3rd, there'll be a meeting to assess this. Your view? Uday? All right, I think let's try again. Uday? Let's take a quick check on the European markets. Remember, in yesterday's trading session, there were a lot of concerns that played out there. We did have weak economic data. The Italian markets, they're suffering because of political uncertainty out there. Today, we're seeing at least some green. The CAC as well as the FTSE, there's some green on the screen there. The DAX, after ending yesterday with a cut of around 1%, it's opened up with some red. So we'll wait by, let those rates settle down, and we'll do a quick check as well. But those are the initial rates that's coming out there. More or less flattish with a bit, very, very bit of green on the screen. But in terms of numbers, well, VR Industries, that in fact is the next company on our radar. Remember, they posted a rather good quarter. The past quarter was quite good. It was up nearly around 30% in terms of revenues. We have Mr. Raj Kundra, the MD of the company, who joins us on the line to discuss more. Hi, sir. Thanks so much for joining in. Well, last year has been quite a good year. You've done nearly around 270 crores in terms of revenue, so you have more than doubled your revenues out there. Give us a sense, what kind of a revenue number can we look at for the coming year? And also in terms of margins, what's the outlook? Your margins have improved to around 10% odd. Your gaming business has been growing. Give us a sense of what we can look forward to FY19.
Absolutely. Good afternoon. Yeah, I mean, the numbers that we sort of promised and targeted, we reached in 18, and going forward, we're projecting about 350 crores for the next financial year, and keeping double-digit profit margins in mind, which we've achieved. I'm hoping to try and increase that to about 12%. Businesses in the pipeline are very interesting. Our gaming business has taken off really well. The Chase Bid show that we had on TV did well for us. Our Beyond Mobiles is doing well, poker. So we're really focusing a lot more on our real money gaming businesses, which are really adding great profits to our bottom line.
Good afternoon, Mr. Kundra. So 350 crore of revenues by FY19. If you could break that up in terms of the three segments that you operate in, gaming, licensing and wellness, how would the revenues look like across these three?
Yeah, so the gaming and the licensing deal will be about 30% of that revenue. And the balance will be contributed from Beyond Mobiles and all our other trading activities that we have within the company, all our exports.
So 30% gaming, 30% licensing, and 40% wellness.
No, not wellness. 40% comes into our exports and our Beyond Mobiles, which is our own in-house brand that we export worldwide.
Okay, and what are the margins across these three?
So margins are approximately around about 13 to 14%.
All right, Mr. Kundar, you're indicating that next year could be Super, because you're talking about 350 crores after doubling your revenues in this year. What's your dividend payout policy? I don't see any dividends being paid for the last few years. Can your shareholders look forward to that?
Yeah, absolutely. We just announced it in yesterday's board meeting. The board recommends a dividend of 5%. So, yeah, we should be going ahead with that.
All right.
Okay. What's the balance sheet of the company looking like in terms of cash or debt?
So we're a debt-free company, which is nice, and we're very asset-light. So, yeah, I mean, the books are looking good at the moment.
And cash? If not debt, do you have any cash that you're sitting on?
Yeah, I mean, we have at any time sort of, 2 to 3 crores cash we keep at any time just for any investments required. But most of our money is going back into technology, into investing in marketing and the innovative ideas that we keep coming up with within the arm.
All right. If I just take a look at your shareholding for the past quarter, I think you're holding roughly around 50% in the company.
Yeah.
If I look at the BSE, it's showing that 100% has been locked in. If you could give us details, where is it locked in?
It's a preferential share that we just done a preferential recently.
Okay.
So warrant issue, yeah.
Because it's indicating that almost the entire holding is locked in. The pref would be just for the added amount, right, that you've issued?
No, the entire is not. Yeah, it's a 42%. At 42 rupees, I've done a preferential for about 6 crores. In 2015, we did one. And in 2015, we had a preferential as well. So there's nothing locked in as such.
Okay, all right. Thanks so much for joining in and in fact giving us those details. So 350 crores is what we're looking forward to. Margins of double digits. They've declared a dividend as well, and the promoter talking about about a couple of pref issues that they've done to themselves at a sharp premium to the stock price. Remember, at that point of time, the stock moved towards 40 rupees.
Inching higher, so now approaching that 10,500 mark on the Nifty. So keep your eye on that. Bank of Baroda is moving quite well ahead of numbers tomorrow. Like we've seen in the case of other PSU banks, Bank of Baroda too could be reporting a loss this time around on account of higher provisioning that they will take because of the slippages into account for the RBI 12th circular. So that's a stock which is moving quite well. And that apart, keep your eye on State Bank of India, Adani Ports, Cipla, GAIL. A few of these stocks too are moving higher. Avenue Supermart, 0.8% equity has traded hands at a price of 1360. So after that big block has taken place, the stock has moved up. So now higher by close to about 3-odd%.
Yeah. And I think we have Mangalam with us. Mangalam, the total number of shares that Mr. Damani was looking to sell, I think you were updating us this morning, it was at around 62 lakhs, right? And 11 lakhs were already done. So it'll be interesting to see who was part of this deal, because 43 lakhs will take the total tally. If in case this was Mr. Damani, then you add the 43 lakhs and, to the 11 lakhs that are already done, you're nearly at around 54, 55 lakh shares. And the total amount, I think, was 62 lakhs. So this could, remove the overhang. Mangalam, just a quick word on this.
Absolutely, Nigel, you said it all. 62 lakh shares was the one which were earmarked for sale by Mr. Damani between 21st May to about 14 June. A large part of the street was expecting this to happen post 1st June, given the MSCI inclusion of Avenue Supermarts. However, if this 43 lakh shares has been sold and it is Mr. Damani given, most likely given the notification made to the exchanges, then perhaps the overhang on of the promoter sale goes away, and which is why we are seeing the stock move higher, and it is at the high point of the day. So let's watch out for the bulk deal data. Because it's 0.8%, it's most likely going to be reported to the exchanges today, so we will keep an eye out on that.
Move on, Mangalam, on Avenue Supermarts, now higher by close to about 5.5%. The street is relieved that at least as of now the supply overhang is out of the way. And I guess who would want to sell, right? Avenue Supermarts. So I guess it's got to be Mr. Damani and the promoter. Who else will want to, sell this company?
Absolutely, Rima. I think Mangalam, in the IPO, retail got what, 50 shares if you got one lot?
Absolutely. And 0.8% equity, I don't think anyone has, apart from Mr. Damani, that huge a quantum. So we'll have to keep an eye out on the fact, because I think it's most likely Mr. Damani, primarily because all the data points match together. 43 lakh shares were left, 50 lakh shares were left to be sold. We had the timeline. And
Mangalam, hold on to that thought. Sources are telling us that Mr. Damani has sold another 50 lakh shares today via that large trade. So, sources are telling us this. I think Nimish could be the one that's going to be filling us in with this. So, as of now, we believe that, in fact, that entire overhang has been taken out because it was 62 lakh shares. Till yesterday, we had a disclosure for around 11 lakh shares. And what we believe is that the remaining 50 lakh shares as well have hit the market and it's been gobbled up. And that explains why, in fact, the stock is up nearly around 4% odd. So that's about Avenue Supermarts. You got 50 shares in their IPO. Said it's a small quantity. If you held on to it, you'd be making close to around 50,000 rupees, which is not a small amount. But
it's a big amount.
Let's hop across. I think Manglam, you're still with us. Pidilite, we're going to be expecting those numbers. So besides looking out for who was part of that transaction, you'll be looking at these numbers as well?
Absolutely, Nigel. You know, you spoke about retail investors sticking around to the shares that they got in Avenue Supermart, so that perhaps sparked a reel of Pidilite, because their business is basically making things that make things stick. So Fevicol, we're expecting a revenue growth of 13%. That is something that the street is working with. EBITDA is likely to move higher. Margins are expected to be around that 20.4% mark. Counterintuitive, as one may say, given the sharp increase that we've seen in crude oil prices as well as crude derivatives. Vinyl acetate monomer is the one that they use. VAM prices, they are up about 20% in the fourth quarter. Going forward, the margin commentary will be more important, but as of now, given the volume as well as given the scale of operations and cost rationalization, the company is likely to improve their margins in this quarter. Something similar that we've seen across a lot of the paint companies, Asian Paints as well. Net profit likely to move higher by about 12-13% as well. The most important thing, we'll be watching out for the consumer business domestic volumes. 11 to 12% is what is expected out there. We'll be watching out for management commentary on the new launches as well as how the waterproofing business is doing, especially given a normal monsoon is predicted and that industry is growing fairly fast. So watch out for 13% revenue growth, a slight margin expansion, 11 to 12% volume growth.
Around 60 points as we speak. The Nifty Bank as well is up another 110 points. So keep an eye out on that front. There's a bit of a pullback, and even the mid-cap index, it's cutting its losses. So good going all around. But let's shift focus from the equity markets to the commodity markets. Manisha Gupta is with us in the studio. Hey, Manisha.
Hi, Nigel. Thank you so much for that. Let's start with the crude oil prices, where we have seen the prices actually come off the highs. The important thing, apart from the US weekly inventory data, which is bearish for the prices, because you have seen inventories gain up for crude, for gasoline. The exports have come down as well. So US clearly is sitting on higher supplies there. But on the other side, you also have seen the speculative money actually come off a bit as well. The net long positions now are 10% off from their record highs. The last 6 to 7 weeks, we've seen active cutting off of long positions. There actually are more shorts being built up around $80 per barrel on the higher side. So that tells you that for the very near term, on the charts and fundamentally as well, all the bad news perhaps has been factored into the prices. But Renisha Chenani then joins us to give us strategies on that space. Renisha, hi. Crude oil prices, how do you look at that for the near term, and slightly longer term, are you still bullish?
Hi, Manisha. I think crude oil prices are creating some technical signs of, topping out, and there are some fundamental news that are also supporting it, as we have seen that OPEC, there are rumors that OPEC can again, increase the output. So I think as technically prices was very much oversold, prices are consolidating here. 48.80 is a very important support at MCX. If that is taken away, I think we could see some more selling pressure. So I would advise to sell below 48.80 for the targets of 4800, and stop loss should be kept at 49.30 for intraday players.
Renisha, are the gold and silver prices looking at any support as the US dollar has paused into its rally? It is 0.25% to 0.5% on the higher side. Is it coming out as a short-term buy really?
Yes, I think from last 2-3 days we have seen some bottom fishing in gold and silver, and I think prices could, again head up towards its resistance level. So for silver, I suppose again 40,700, 750 is a very strong resistance level. So from current prices, I would recommend buying silver for the targets of 40,700. Similarly, gold is also having, some resistance at 31,500 odd levels. So buying could be initiated, and we can see prices running up to their resistance level as dollar index has somewhat paused its rally. This is supporting the precious metal bank.
All right. And Renisha, also, what is your sense on the metal prices? Because we are looking at the US dollar, we're looking at the Chinese data, the LME and Shanghai inventories, and of course, taking cues from what the US has been talking about, the US and China trade talks. Taking all of that into light, is there a strategy that's coming up for this sector?
Yeah, I think the the thing that is on the front burner is currently US-China trade talks for base metal pack that is supporting the pack as of now. And as they are turning positive, base metal prices are somewhat supported. I think one should pick copper at this moment and lead at this moment. Both are running on their own fundamentals. Copper, I think, could be bought at current prices, and we can see like 472, 73 kind of levels in today's session or by tomorrow. When lead seems to be, heading higher by 1% or 2%. So both of these are the picks for today for base metal pack.
All right, Manisha, thank you very much for that. By the way, the Sensex is now higher by close to about 225 points, getting an uplift